Good morning. Let me remind you that trading's risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. But please, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Namaste. Thank you so much for being a client. We appreciate you. We care about you. We want you to succeed. For altruistic reasons, maybe, but for, how about symbiotic reasons, right? You're a currency trader. Traders Way is a currency trading brokerage firm. So the leadership at Traders Way says, hey, you know what? We would like to invest into our clients up front. We would like to give them support and training every single day with the overriding goal of helping them become successful. Now, why would a broker want to do that? Well, think about it this way. If you can trade and survive and then thrive for long periods of time, for months and years and years and years and years and years, then both parties, you and them, will benefit. Now think of it this way. They can attract you with competitive spreads. That makes sense. World-class customer service. That makes sense. They can offer you fast execution speed. But before you get to all of that, it all starts with training. Do you have the knowledge and skills to survive? And that's what they want you to survive. And then, of course, after you spend maybe days or weeks or months or even years with me, and you develop the skills to be a successful trader, and you develop the confidence that you need to become a successful trader, and you get to that point where you want to trade real money in the market as a trader, hopefully you pay it back and choose Traders Way to be the brokerage for your successful foreign exchange trading business. Makes sense, doesn't it? Yeah, makes a ton of sense. So how you doing? I propose today that we do dollar pairs, yen pairs, Swissy pairs. Should we look at the Great British Pound? Well, I guess we need to say a couple of words about the Great British Pound today. It looks like it's Theresa May's last day as Prime Minister. Rumor has it she's going to move to France and become a French citizen. I don't know if that's true or not. Don't quote me on it. But anyways, yeah, holy smokes. So the British pound's going to move today. The vote starts at 2 p.m. Eastern time, I believe. Amazing, right? So keep that in mind. Nothing may happen until we get there. And then, like any election, get ready for people responding to media leaks or even fake news. Yeah, maybe Chuck, huh? Yeah, she's got the Molotov cocktail ready to go. So anyways, be careful on that one. How do you want to define your trading career? Do you want today to be a defining moment? Do you want your trading to come down to years and years and years of just boring markets and boring trades that slowly eke out a steady return? Or do you want fast, explosive gains and losses? Well, it's up to you. I mean, it's whatever's attractive to you. So the British pound may move a lot today. Maybe it moves steady in one direction. Maybe it's clear that Brexit is over and all this has been for nothing. And there's a huge response to that news, right? Or the opposite of that. So there might be a big steady move today, but there also may be a big choppy move, like straight down, straight up, straight down. It could be he said, she said, chow, he said, choo, right? All over the place. So just be careful if you're going to trade the high volatility stuff. Remember, it may be wise to lower your lot size to handle the higher volatility. Therefore, you can afford to have a larger stop loss. For example, when you're in the market, maybe you move your stop quickly so that you're hero or zero. You make a lot of money, or you don't lose anything. That sounds pretty good to me. Okay, so just be careful. Okay, that's all I'm saying. Just be careful. You got that? You're welcome. All right. So what? Let's just go through it, right? Let's go. Let's see if we have any leading indicators here. Oil's doing what? Nada. Okay, nada. Are we at a key level of support, or what's holding us up? It doesn't seem to be anything technically, right? I guess here. So let's mark that. So it's going to come back down to whether you're a bull or a bear again. So your bias would be to sell high or buy low. Okay. There's no real way to know either way. So you either buy down here or sell up high, right? So it comes down to your bias. There's no technical analysis to tell you it's going to do one or another. This is a longer term support. This is shorter term resistance. Both are valid. So again, it just comes down to your bias. Are you buying a triple bottom, or are you selling a top here? It's range play, right? And just to confirm, like if it did something like this and you're a bull, you would buy this, for example. Oh, and by the way, this would have to be significantly lower, but let's see. Were we expecting yen strength or yen weakness today? And I mean Japanese yen. I don't mean yen pairs. Yen strength or yen weakness? Yen strength or yen weakness? What did we start with the assumption with today? Well, Chuck, I think we've discussed for the last couple of weeks that may have happened last week. So I thought we talked about the stock market coming down yesterday. I thought that was the theme of yesterday's trading. So yeah, yen strength, not yen weakness. So we'll see. We've already had our rally. A significant rally in some cases. So anyways. Cool. It's a good thing I ask, I guess, because sometimes I just assume we all agree, and then I realize it's not that anyone's right or wrong. That's how the market is all the time. It's pretty amazing. So even if we discussed the stock market coming down yesterday, and we talked about gold and dollar and yen, but even then it doesn't matter, because it comes down to it comes down to our own bias, because we're going to filter based on our bias, right? A lens is what it's called. So you're going to see. So that's interesting. Okay. So for example, does the dollar get strong or does the dollar get weak when the stock market comes down? Oh, there's something going on here. The dollar gets strong when the stock market comes down. Yeah. Okay. Where's the sell zone? Right here. Okay. If you know how to swing trade, that's pretty basic. This is the lower low type thing. Okay. But this would only be something you would plan if you thought the stock market was coming down. That the false rally would be over, right? Now, what if you don't believe the false rally is over? If you don't believe the stock market rally is over, then you're actually setting up the next plan. This is a buy zone for you. It's not a good one because you don't have a trend behind you. But if you believe the stock market's going to continue up this week, then you're considering this, I don't know, a 3-wave correction or something. And this is your plan if you're a bull. Okay. So you're perfectly okay with this, but there's nothing below this, okay? I mean, maybe you fold in the monthly central. I mean, so this is an Arctic turtle, right? Where this is going to go up, but it's going to stretch its neck out to get this and then pop up. That's fine. That's fine too. So if you're a bull, this is pretty interesting. It's a pretty aggressive move because it hasn't done anything yet. Typically on like this is an hourly chart, but typically on a 1-minute chart or a 5-minute chart, you're going to want to see like, I don't know, like something like this first, right? And the challenge to those smaller time traders is going to be in here. So really you kind of want this. Okay, so you would enter either in here or you would enter in here. Okay, this is okay. This is okay. So either way, does that make sense? Okay. Right. So like a bear, for example, it's pretty straightforward. A bear is going to have this as a sell zone, and a bearish trade plan is going to be like this and like this. Although the slope of the channel suggests a higher rate, a higher rise, or a flatter slope. Okay, that's what the channel tells us, something more like that. And because we've already had a high velocity move, then you'd actually take it like this, and it's going to really just kind of monkey around until we hit the top of the channel and then break. Like something like this. Other things kind of look at this academically, right? I have to go back to what we talked about yesterday and on Friday. You know, you have to decide, this is the weekly and monthly targets. Is this close enough in your book? Question mark. It's subjective. You have to decide whether you're buying this dip and rallying it up. Okay? That's a big question mark, right? And then, so your first thought is this next rally going to head higher? And I believe we did talk about it back on Thursday. Okay? That's what a bull is trying to decide. Were these extra pips on the table, and there's not many, is it worth, right, this amount? Is it worth risking money? Or is that good enough? Because again, this line here is the conservative top for January. So like, is that the top of the market? I don't know, but we did talk about it then. And then how would you know is the next question. And, right, how meaningful is the lower high, lower low scenario? As a technician, how much meaning does that have? And is it more meaningful when you have a monthly top, sorry, a weekly top and a monthly top right here? Weekly top, monthly top. Does this pattern now have more weight? Question mark. And if you were bullish, obviously this is the sell zone. Or bearish. Did I say bullish? I think I said bullish. I meant bearish. So if you're taking the lower low, you're going to sell the lower high off the roll reversal. That's why that's a sell zone. And then to use weekly pivots, this, no, hang on, I misdrew that. Let's use this tool. Where is it? Oh, I guess it's here. This is a sell zone. Now, you see how it's dangerous? So typically in a sell zone, what you want to look for is lower low, lower high, lower low, lower high, lower low, right? And you want the sell zone basically to be off of a rally, not off of a decline. Okay, so this isn't perfect, but at least for the last few days, this makes a ton of sense. Okay, this was a good exit for bulls. This was a good sell for bears. This was a good sell for bears. Okay, and in the future, this will probably be a good sell for bears. So you have to do your job now, like you were supposed to do this and look for a sell zone. So now you would do this. Okay, so I do this over and 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 over. As soon as I get a lower low, I look at the, right? I look at the roll reversal and I drag it across and I tell myself over here is my new sell. So I'm constantly predicting the future. Okay, and that's price action. And there is a training course on FX Bootcamp about that. Right? ECB missed an opportunity to raise rates. This means, yeah, well, maybe. Remember, they're trying to get into a normalization process. But look what happened when the United States raised interest rates. Emerging markets crashed. And that might, right? That might hurt, right? That might hurt them again if the ECB is raising interest rates. I don't feel like we're quite there on the ECB. Okay. Oh, you like that one, Raymond? Yeah. All right, so like, let's talk about the ECB. Like, what does the ECB have a dual mandate? Yes or no? The Fed has a dual mandate. Does the ECB have a dual mandate? Chuck says no. Okay, a single mandate. No, Alex, you're wrong. No, they don't. They do not have a dual mandate. They have a single mandate. What is the mandate? What's the one thing the ECB is supposed to do? There's only one thing. What is the one thing that the ECB is supposed to be doing all day, every day, 7 days a week, 24 hours a day? Price stability. Okay, yeah. What does that mean? Can we describe it in a different way? Finger says inflation. Jimbo, manipulate the euro. Come on, Jimbo. Inflation, inflation, inflation. Inflation control. Basically, make sure we don't have out of control inflation. Now, the funny thing is, that's what they were supposed to be doing with Greece, for example. But so how do they do it? Right, I don't know. But anyway, so let me just ask you a basic question then. If the ECB's one thing, 24 hours a day, 7 days a week, is to worry about inflation going up, in this case, they're worried about no inflation, but let's just deal with that. Is there so much inflation in the Eurozone right now that the ECB should be scrambling to raise interest rates to keep it under control? Is that where we are right now? They're like, oh my gosh, right? And they're standing around outside smoking cigarettes together talking about inflation. What do we do? There's so much inflation. Right? No, well, so then you just answered the question, like, what's the ECB going to do? So when you're reading in a newspaper, they're like, well, they're seriously thinking about, raising interest rates and normalizing and all that. You're like, really? Right? So again, that's where I want to get you guys. I want you to stop listening to other people, and especially, media and television and all that. Like, I want you to get to the point where you rely on your own common sense. No, not FOMC. That's different. Okay. Tasso says FOMC dual mandate. No, the Federal Reserve Bank of the United States has a dual mandate. The Federal Open Market Committee manages open market operations. They also, and then the Board of Governors does things like reserve requirement ratios, and they don't need the FOMC for that, right? So they can control things like the discount window, the discount, right? The discount rate, the reserve requirement ratios, right? Which either puts more money into the economy or takes it out. But we haven't adjusted the RRR since like 1972 or something like that. Or was it 92? Maybe 1992 was the last time. So we don't touch RRR very often. The discount window doesn't get addressed that often. It did in the financial crisis, though. And there's a point, I have to double check, where the Fed started paying interest on deposits, both ER and RR reserves. But do they still do that? I don't know I don't remember them taking it away. So, anyways, that would be interesting. And then the FOMC manages the open market operations, the Federal Open Market Committee. And the very first thing they talk about at the FOMC meetings on the Tuesday, the very first thing on the agenda is the head of the trading desk at the New York Bank, at the Bank of the Federal Reserve Bank of New York. There's a trading desk, and they do OMOs and foreign exchange trading. And the first thing they do is they bring the Forex guy in. They're like, okay, what's going on? And he gives an overview of the open market operations and foreign exchange trading. So that's what the FOMC is. They don't have a dual mandate. The Fed has a dual mandate. There's a difference. I'd be remiss not to bring it up. So anyways, going to the ECB, they only have one thing to worry about, inflation. The reason for it is because we have different governments. We have different sovereigns as part of the ECB banking system, right? So it's not the ECB's job to say, Spain, you're doing this wrong. France, you're doing this wrong. Germany, you're doing it wrong the other way. Italy, Greece, right? Like, it's not their job to go in there. All they can do is raise and lower interest rates, essentially, right? I mean, obviously, they've been buying some bonds and all that kind of stuff, but their job is to create or destroy inflation through their open market operations. But the trick and the reason the Eurozone's having so much trouble is what's good for Germany is horrible for Greece, and vice versa, right? And their policies don't fit. Like, you know, in like Greece's case, during the financial crisis that Greece went through, oh, you're like, oh, we'll just devalue the currency. But you can't just devalue the euro. Yeah, France protesting. Yeah, and Chuck says France is always. I like to joke, and some of you guys are getting really upset, and I'm sorry if I take things too far, but I always used to say, you know, that, you know, France has like 130, you know, holidays a year, and in between they strike. That is not fair. How dare you? All right. So, anyways, so that's that. So when someone says, yeah, I think the ECB is going to raise interest rates soon, you're like, really? Based on what? And that's the better attitude. Not the really attitude, but more like, okay, based on what? That's very interesting. You have that opinion. If they did that, that would move the market. Good. Give me the reasons why. And it'd be very difficult, I think, for someone to give you 3 reasons why the ECB is imminent on raising interest rates, or even this year. You're like, really? So growth is crazy, right? And what? What else? And inflation, right? Oh my God! And unemployment's low, and wages are high, and you know, people are spending. And we had this period when Americans were, when we were climbing out of the recession, for a year or two, people were starting to make money. They got their jobs back. The housing market stabilized. And Americans paid down their debt. They didn't buy things. It took a while to get there, right? So the MPS, the marginal propensity to save, was much higher than usual, but Americans went through a long period of time without money, and then they accumulated debt, and then all of a sudden they're like, oh my God, I got to pay down these credit cards. I'm drowning, right? So anyway, so we'll get there. Europe will get there. But the key thing I asked you well, I didn't ask you to keep an eye on this, but you probably should. We make money as currency traders when money gets exchanged over a border. So like trade is a great one. Investment's a great one. So how about trade? Look at the Eurozone specifically, okay? And you might want to break this into 2 different types of countries. You can say, well, there's like Germany and Amsterdam and Holland, right? You got the Netherlands and you got Germany. Okay, make that one country, right? And then there's everybody else. Then you take Spain and you take France and you take Italy and put those together, and then look at these 2 types of data, and consider trickle down. All right, the Dutch and Germans are richer than everyone else. Let's just put it that way. Okay, future book, you are cursing in the, where do I get that? You're cursing in my office with my friends and colleagues. So I'm going to try this. I'm going to put you in a timeout. You do it again and you're kicked out forever. Cool. All right. Sorry. So anyways, what we want to see is when are the Germans and the Dutch buying foreign products? Because that means the local products are too expensive. Or another way of looking at it, foreign products are cheaper. When are they buying foreign stuff? Because that means they're sending euros abroad and they're bringing products in. That is going to weaken the euro. Okay? And then trickle down even better. When is Spain and Portugal and Italy doing the same things where they're deciding to buy things from abroad? Okay? Yeah, Roger, Amsterdam is almost a country, but anyways. Okay, so just look at that and use that as a leading indicator of the beginning, like a green shoot for the ECB. Okay, and I think even better, it's like when Spain is doing that, right? When Spain is starting to import significant amounts of stuff from places like China, that's cool. Okay. So we'll probably see what a Chinese devaluation as well. I think China's trying to stay away from devaluation. That's why you see things like RRR. That's like the tax rate. When was the last time we saw a Chinese tax rate or tax cut as a stimulus? It's strange, right? Mentored in Forex, but I don't know about you. Why would, and don't have a lot of money to. Foxy Fortnite, and why would you be mentored in something you don't know much about? I mean, you're like, well, why would I be mentored if I knew a lot? No. If you don't know enough to know that you want it, then I would have to guess you're not ready for it. You don't have much money to invest. Is it worth it? Not to you. Yeah, no. Take some time, Foxy. Give it a year. Don't do anything for a year, Foxy. Let's do it this way. Foxy, do your best. Come to my webinars as much as you can over the next year. Buy a couple of books. Read a couple of books. And take your time. If you can't put your first year into it on your own, it's not going to be worth any amount of money. Okay, but if you want, for 10,000 bucks, I'll mentor you for a little while. Yeah, Chuck, right? Oh, so Ed says, so if I understand correctly, when a country, let's say Canada, great, imports products from other countries, the Canadian dollar will weaken because they're flooding the market. Yeah, generally speaking, yes. Now, the next part of that is what kind of economy are you studying? So Canada is an exporting country, right? So that's going to also alter things. So let's say Canada buys a lot of stuff from the United States, but then the United States buys a lot of stuff from Canada. You see what I mean? And I wrote a paper years ago for, I don't even remember, some Harvard class about the Canadian dollar and its relationship with the United States. And it's it's more complicated than you would think relative to other countries because of the relationship so tied to the United States. So when the United States is doing good, what happens to Canada? When the United States is bad, what's happening in Canada? And how does that affect imports and exports? And there's always like an offsetting. So Canada may be difficult, but like is like, I don't know, like, again, I think Spain is an interesting one. It's a big, mature economy. It's a big part of the Eurozone, all that kind of stuff. But do the people in Spain have jobs? Do the people in Spain have good jobs? Are they making good money? Do the people in Spain expect to continue to make money? Are the people in Spain, have they spent the last 2 years paying down their debt? do the people in Spain feel confident about the near future and then the further out future? Like, do they feel good about 2019? Do they feel good about the next 5 years? How do these, right? How do the Spanish feel? And are they at the point where they're willing to start spending money in their economy? And then if so, if they're spending the money in the economy, are they spending it all in local products and services because they can't afford a foreign product, because foreign products relative to the euro are expensive relative to what you can just buy in Spain on your own? Or is suddenly foreign products attractive in terms of euro? You're like, oh, well, we can afford this now. It may be a luxury, but we can afford it. So now you start spending. And all of that is economics, right? And so are they leading up to that? And then are they actually spending money? So you want to track not just a data point, but right, one data point a trend does not make, right? Thank you, Kurt Worley. So you want to look at, the trend. Is that improving in Spain? You say, ooh, it's improving in Spain. Well, how's it? What's going on in France? What's going on in Italy? What's going on in Greece? Greece might, like, are the Greeks importing yet? Like, these are all really good questions if you wanted to be an expert in euro, and in particular to follow that through with ECB policy expertise, right? What kind of trade volume would be enough? Well, find out the historical average, right? So like when you're doing analysis, guys, in economics, you look at like the historical average, and you want to find out where you used to be, where you are now, and then where you're going. So, are we here in a recovery phase back to the norm? Are we past norm? And this happens. This is typically when the ECB is raising interest rates, right? So are we here? Are we here? Right? Right? Where these are business cycles, if you want, right? So in this case, is spending. I guess I should have done this in a slightly different color, huh? So if this is normal, average, if this is average, okay, in economics, in particular macroeconomics, they call that potential. Potent. Okay, this is there's an I in there and an L, you can't see it. Okay, so this is potential. Okay, so are we below potential or above potential? Are we moving toward potential or away from potential? Sorry. Hang on. There we go. Sorry. Okay, you see this? Here's potential in red, potential. And then here's what we're measuring. Okay? So are we below potential but moving toward potential? Are we above potential moving away from potential? Are we above potential or moving toward potential? Are we below potential moving away from potential? Are we below potential or moving toward potential? Are we at potential? Okay, so that's what a lot of what macroeconomics is studying. Now, this could be GDP, and that would really influence the ECB. But in this case, is spending, what is normal is the first question you have to find out in your research, okay? Okay. EU prodigy. I like things like, so the question here is, so I could be able to predict the movements of the guard, like if I pay attention to some news. Well, I don't know. Oh, graphic, you said. I thought it was a guard. Well, I would, if I were me and I was interested in the ECB or the Eurozone, I would spend a lot of time on the ECB website, They give you all kinds of research. They do press releases on a regular basis. They do press conferences on a regular basis, right? You could also, like, how about the Swiss National Bank? Because they're in the middle of Europe, but they're not in the Euro, right? They're not in the EU, so they're going to give you interesting insight from a different point of view to confirm or deny what you're seeing. There's the World Bank, right? That's an interesting one, right? What's on Christine Lagarde at the IMF, right? So on her mind, so go to the IMF website. As far as growth, global growth, I like the OPEC website and the IEA website. Okay, all of this stuff is very, very influential. Okay, EU Prodigy. And it's good hardcore data. Like, it's good data. And the interesting thing is they just tell you. It's not hidden in some, PhD gobbledygook stuff. There will be research that has PhD gobbledygook stuff, but they'll say it in plain words, in plain language. Okay. All right. Cool. Gold. So there's gold again, just kind of moving sideways. Bulls are in this kind of thing. Like, look, I don't like doing anything in the middle of a range, but if you were just dying to be a bull, this is an area that you would force feed yourself in. Like, it's not really, it's a trend trade inside of a range market, but you might get lucky, especially on Brexit Day. So anyways, based on that nonsense, it wouldn't be a correct analysis. Like, you'd say, all right, well, Wayne, I'm going to swing this up to here, and that's right out of the swing trading course. I'm like, well, okay, sure, that's a proper swing, but in the wrong market, the wrong circumstances. Right? Have you seen the commercial where the guy shows up to the house and he rings the doorbell? Some guy opens the door. He's wearing a football jersey. There's a bunch of other dudes behind him wearing jerseys. They got the TV on. There's potato chips everywhere. And then it shows the camera of the guy who rang the doorbell, and he's dressed up as a centaur. And he's got no shirt on, and he's got like big funny ears, and he's got literally a second pair of legs behind him, so he looks like he's half man, half, deer or antelope or something. And he's like, oh, wrong fantasy party. I'm sorry, guys. I think I misunderstood, right? It's sort of the same thing. Like, all right, yes, you're taking a valid swing trade, but you're bringing it to the wrong party. But it might work out, especially with the Brexit thing. Cedric says, can you give us the websites to all the major... Cedric, they invented something called Google. And I think if you Googled it, it comes up like in 1 second or less. So no, I'm not going to give that to you. You're going to have to do it yourself. You have to type in like Central Bank of Australia, enter. Central Bank of Canada, enter. Oh, you might be a return person. Return. Central Bank of Japan, enter. You'll get there though. Come on, you'll get there. What a day, huh? What a day. Going to here. So bulls have something to figure out. I don't know where to put the plan B. I guess we got to go here. So if you're a bull on this, this is sorry, CAD dollar CAD, USD CAD MOUSD. All right, so anyways, this is what you'd be doing here. That's plan A if you're a bull. Plan B, plan A. So we'll put this here, A. Plan B would be here. I guess you could even do plan C. You'd be a stubborn bull. It's valid. Okay. So look, I just planned your whole day. I don't know what to do today because the Brexit thing. May stay out and see what happens. Well, just don't trade the pound. You'll be fine. I'm a subscriber. Right on, EU Prodigy. Right on. I will be back. Have a good day. And to you, sir. Well, I'm thankful for your help. So it looked like the same thing, huh? Lindsay's doing it. All right, Lindsay. Gokin and EU Prodigy, the same person, huh? Interesting. So, look, that's how you trade, guys. Do you guys do this like every day, every setup? You know, you write it down, you maybe print it out. You're like, I know what I'm going to do today. And then now you simply look for opportunities. Is it going to reverse and head up here? Question mark. Is it going to reverse and head up here? Question mark. Is it going to reverse and head up here? Well, plan C, according to pivot points, is not likely to happen today. It could, obviously, but not today. This is sort of mediocre, but I'm force feeding the reversal area of the daily pivots. And this could be it here, right? And this would predict that up to the 200 EMA. Okay. This would probably only predict this and maybe down. And this could be a bigger reversal, but you can only predict the top of the market as well. Probably down and then up. Okay. It's 2 p.m. Eastern time. Hey, what's up, Pharaoh? What's up, buddy? Why are you guys afraid? Several people have said that. Because of the news on Brexit, it is very difficult to trade. I am all disturbed. Why? You need to learn how to handle volatile markets, right? Okay? You need to learn how to handle volatile markets. And very often there's planned volatility like what we have today, but then there's also unplanned. I've been in the markets when crazy news happens. And then lastly, like from my point of view, on a regular basis, let's say the euro would move 100 pips a day, the pound yen would move 300 pips a day on a normal day. But then there were very often times when this would be more like 1,000. Okay? And that's right. Non-farm payrolls would move 300 pips down, right? 200 pips up, right? in let's say 5 minutes. Now it moves 30 pips in 3 hours, right? So like from my point of view, it's not nearly as crazy and volatile as it was in the past. So it's what I'm trying to say. I'm not saying it's not dangerous. I'm saying you're walking into something with a point of view which may or may not be the same point of view as many people in the marketplace, the market participants. And one day, I think you want to either be a professional trader or you want to be able to trade like a professional trader. And I would look at this as an opportunity to learn how to trade in a higher volatile market. What are your strategies if you expect volatility? Running away? Well, that's not what a professional trader should do, because it's their job to manage people's risk for them. Either take the risk or remove the risk, but it's your job as a money manager. Okay? So you want to be there on behalf of your clientele, maybe not to make money, but certainly to manage the risk for them. But there's probably is an opportunity to make money on the volatility. So running away isn't the right thing, right? It's like, right? It's like learning you have cancer, so you go on vacation and try to forget and try to ignore it or forget your way into being healthy. It's not, I mean, it's not the right thing, right? So I would say be there when it's volatile and act like the way you think you should be acting. And if you say, I think I should be conservative, okay, great. Well, start like, what are the major levels of support and resistance on a higher time frame? So look at your chart from a 4-hour point of view. And then what are the minor ones, okay, of support and resistance? Mark all these down and then look for key things to happen at these levels and maybe cut your lot size in half so that you can have double the stop and try to chip away. And if you're worried about losing money, just use a demo account, but get the experience. And running away isn't the right way to deal with issues, any issue, right? Does that make sense? But do not go in the attitude, do not go into the market with the attitude of making quick money. Okay? Go in like, do your job is a different attitude than make a lot of money quick. Oh, boom, let's see if that makes money. If you can't put a trade plan together now, right, then you're fearing the wrong thing. Your fear is not that the market's out of control. The fear is that you don't know what you're doing. And if you don't know what you're doing, then you need to get educated. Right? Your fear of the unknown, and you have a fear of lack of control. See, I don't fear it because I have control. I'm experienced, and I've also developed discipline, so I don't fear it. Why would I fear it? Right? Okay, great. All right. So be there. Oops, but don't be afraid. All right, so I break it down with trade plans to help me manage my fear. Plan A, plan B, plan C. Cool. Okay. They're all bullish. And this isn't a good place to sell. You should have sold in Asia yesterday if you were a bear. But it's not a good bearish setup up there because it just made a higher high, right? This is a better role reversal. So that's why I think up, 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 down, down, buy, and up. Well, there you go, Lindsay. Just roll with it. Roll with it. All right. Nothing new here, huh? There was a bullish entry, so I don't know if you're going to take the next one. Let's go into a 15-minute chart. What was the bullish trade plan for this pair on Monday? That's where a bull would buy this. Okay. And what is the target? Oops. Just a basic swing trade, right? So you notice it's right off the M2. So this is a monthly actually, I don't know if it's a monthly M2. We'll just say monthly pivot. And it's a weekly M2. Therefore, the target's here. 74.71. So 74.75. 74.7495. Cool. So whoever bought it here, their conservative target is there. So what's happening now, if I were to change the colors, what they're doing is up, 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 down, down, buy, up, 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 up. This is a bigger down, down, so I don't like it. Okay. Okay. And sort of the catalyst to get this to go higher would be like Chinese stimulus. Okay. This is a bit of a pullback, a little more than I would have liked. So my plan A would have been buy here. The plan B is to buy here. Okay. There is no plan C. You know, so this is it. There is nothing else to do here if you're a bull. So it needs to do this, right? So keep your stop close in this case, because if it drops like this, you're not really interested anymore. It's already had the chance, right? If it doesn't take plan A, you're like, well, that's really disappointing. So it has to take plan B or you're out. Not that you lost a lot of money. It's just that you're in control, right? So you're like, I love this. I'm okay with this. Anything below this, I'm not interested in. You're just like, I'm not interested. Pass. Okay. Okay, we'll do all the yen pairs now. Radioactive, I'm radioactive. So we've hit our trade for the week. Let's go into a 15-minute chart. Back this out. Okay. Bottom. Right? High or high. This is the swing. This is the target. What happens now? I don't know. I don't know. You could try again in here, but it's much less good. Right? But you see the weekly swing, you were done. The entry was Monday, the exit was Tuesday. That's it. I don't know what else is going to happen this week. You can say because it's a Tuesday, it's a counter trend trade. So if you were trying to do this, you have permission. But that target actually is only the central, which is here. So that's almost done, right? So, you know, I don't know. I don't know. That's the clear trade. And I don't know what's next. Let's see if we can add the monthly pivot. Yeah, so it's this thing. So eventually the target, the playbook says that, but this is not your playbook play, right? But if you were to use the playbook, you'd say early in the month, counter trend trade, and this gets you here. I don't like it, but I could see it. I don't like it, but right. Thanks for subscribing, Crypto. You always see counter trend moves on Wednesdays. Well, you can't say always because I very often see them on Tuesdays and Mondays. They don't happen. The good ones don't really happen on Wednesdays. The ones on Wednesdays are a little bit late for counter trends, and so they're a little less reliable. Thursdays, no. And then Fridays only if it's at the end of the day, literally at New York close. Very often you can get way out of position and then you can sell into it. Yeah. But often, yeah, well, I'd even argue like often Wednesday is a little late. Okay. It's not like bad, but it's not as good. So like a Tuesday and a Wednesday, right? Now, if you get a counter trend double top, that would be great. But it seems to me that if you have a Tuesday move, more people get out, especially if they were in it for a 2-week run, which in some market conditions, that's pretty obvious they've been in for 2 weeks. So that pulls more people out because counter trends always start with profit taking. Okay. So like right now, the way I would describe this market is that bulls are selling. Okay? And there should be so many bulls selling that you get the big move. Okay? Now, pound, obviously we got this risk today with Brexit. So let's prepare for our emergency meeting here. What are you going to do to mitigate the risk? So where are your key levels? Would you agree that that might be an interesting level? Okay. And the thing is, well, if you thought that was interesting and you have a weekly target here, you've already shorted, right? I mean, you took the counter trend and you think it's not a counter trend, but a reversal because you've already done your analysis. I mean, that's pretty easy, right? I mean, at some point, the fish do jump into the canoe, right? Okay, that looks interesting. This seems pretty extreme, but let's get that into there. It could happen. And then let's get up here. This is definitely extreme. Okay, cool. Should we mark the tip of the dip? Sure. And we don't have much else on the downside. I'm radioactive. Let's do this one. I think we got it right. I'm just dragging the stuff across so you can see that it was important in the past and therefore it was important in the future. Okay. All right, and then just for fun, just to complete it all. All right, cool. All right, would you agree that these are prices that could be significant turning points for the British pound today after some sort of initial spike? Okay. So then you mark them, and you're not a buyer here, but you could be a seller. You're not a seller here, but you could be a buyer. Okay? You're not a buyer here, but you could be a seller, so on and so forth. So what are you going to do if it comes down to here? Okay? Well, one of the things I kind of see a lot is it breaks through the first one and goes to the second one. So, but these are key prices based on past performance. It's not predicting a future result, but like buying here would be bad. Okay. But maybe if you were a buyer, what if it did this on the way up here? Then you'd buy a dip. So remind yourself, you only buy dips at support. Okay? That's all you're capable of doing. And if you don't get dips at support, you're not interested. You don't buy it high. You don't buy high. Like if it skyrockets up here, you don't buy high. And if it goes like this and that, but it doesn't hit support, you don't buy that either. And since you're worried about losing money, well, if you follow this rule and you don't chase price, you're significantly less likely to lose money because you just won't be in any trades, but you're not running from it. You're just not getting what you're asking for. Okay. If it drops down here, oops, that was excessive. Okay. If it drops down here, do you sell it here? No. Okay. If it does things like yeah, you have the right if you want to be a bear. If it looks like the pound is collapsing, yeah, sell rallies, and often it'll spike way down, and then it'll come back up, and then it'll work its way down again. So look for pullbacks, right? Does that make sense? But you have to do this ahead of time, guys. You have to do this now. If you're simply reacting to the market, that's where your fear comes from, because the market's in control and you are not. You are out of control. So if you control your behavior starting with analysis, you have a plan, and then you either execute your plan or you do not. So again, the way I open my book is with The Art of War, and it says an honorable general is victorious because many plans are made. So you'll have to get the initial reaction first. So the vote, you start to see a big decline. Okay, and you say, oh, I guess the market's taking it as a negative for a bear. Cool. So now you get yourself into selling rallies. Down, 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 up, up, sell. Down, 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 up, up, roll reversal, sell, right? And then you get to here, take profit. This one's way more important than this one. Okay, so again, sort of the closest ones are less important during big news. Okay, so for example, let's give it was dramatic news. Let's say it just goes boom. Okay, in that case, this is plausible up into the secondary. If it goes, I guess we'd have to take, it might be the next one. Actually, you know what? Let's try to get the other one in. Yeah, definitely. All right, cool. So let's go back. Okay. Boom, 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 boom. Okay. Or boom, 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 boom. Okay. And then what happens on these retracements, we don't really know, but you would probably consider a continuation, right? Eventually getting here or whatnot. Okay. Depends on what the news is. If the news is it's almost for sure Brexit is over and the UK say, sorry, oh, chop, right? If Brexit is off, then, that's going to really move things. FX, Forex Pipper. Why are past prices important? Self-fulfilling prophecy? Is that right, Greg? Right? Forex Pipper, I mean, technical analysis is very much a self-fulfilling prophecy. So, it just is. It just is. Is that right? Well, the Exiles 100 says Brexit won't be off today no matter what the vote result. Yeah, but it's the market's interpretation of what it might mean. So you're right, like there's no way technically meaning like legally, there's no legal end to Brexit today. But that's not what's important in trading. For example, whenever it comes out, whatever news event we're waiting for, NFP or an interest rate decision, the obvious or the expectation, the expected, all of that, like what we already know or think we know is already priced in, right? Great. But what does it mean for the near future? And that's what we don't know. And so we don't know how this vote's going to be. But if the outcome is interpreted by market participants of that's it, Theresa May's lost her job, there's going to be another vote, another election, this whole thing's thrown out the window, goodbye Brexit, that was so 2018, right? In an instant, it's gone, but it hasn't happened yet. Oh, did I miss a question from John Simpson? For your pivot point settings, do you use traditional, Fibo, or classic? What the hell's the difference, John? Like, I have no idea. I've been using pivot points for so long, like all these other versions, I don't even know what they're called. Right. I saw that. Yeah, so I don't know what the other one. I don't know what I use. I guess, say, what's the difference between traditional and classic? Like, I have no idea. They're just pivot points. Does anybody else know what I use? I mean, I've been using them for 12 years. What do they call them? They're Wayne's pivots. They should have a name, I guess. But, yeah. Yeah, Dan says you don't know the unknown, and that is true. Yeah, well, I can't help him there then, Kent, right? In their settings, you can switch them and the values change. Yeah, if you adjust the settings. This is not the Brexit that was voted on by the people, so it'll be rejected as much worse than the original version. Yeah, well, whatever, Michael, right? Whatever. That's another trade. So, like I said, we went all the way back, I don't know, 6 months or something. This is a sell if you're a bear. It's definitely not a buy. I don't know if you're putting that much analysis into your trading, but this is a counter trend trade too at a resistance zone. And if you're a bear, it's a lower high. So this is the big move, right? So, you know, like this should have been a sell hours and hours and hours ago if you were a bear. And if it's not, I invite you to spend a little more time on your trade planning. Right? I think when people go through their performance analysis, right? When people go through their performance analysis, 9 times out of 10, I believe they find that it's not their knowledge of technical analysis that's holding them back from success, right? It's their trade planning, their discipline, that kind of stuff is what's holding them back from success. And it's such an eye-opener to go, oh my God, it's me. And sometimes it's a rude awakening, but it should be refreshing. You wake up and you're like, oh, I'm totally capable. I just now have to do it. But is there anyone going through performance analysis right now with their coach? Well, no, but that's not that. I mean, that's not you. Yes, I would agree with you, Forex Pipper. But that's not like your capability. That's just over leverage. A lot of people, yeah. See, quite a few people are going through their performance analysis now, and they're with their coach. Yeah, and it's amazing, right? Oh, Gary's about to start. It's amazing because you're like, oh, it's not that I don't know pivot points enough, or I mean, sometimes it is. Sometimes it is. Sometimes, but that's another rude awakening, right? Because I used to get this a lot when I mentored people. They're like, Wayne, I'm going to hire you to mentor me because I'm quite good with technical analysis, but for some reason I'm still not making money. So we start the mentoring process and they suck. I'm like, oh my God, I found out your problem. You suck. Right? Like, what the are you doing? You're selling like 9 candles late, and you're selling in support, and you're not doing multiple time levels of analysis, and you're chasing price, and you're trading at like the worst time of day. I'm like, I just found 9 things you're doing wrong on a regular basis. Maybe it's some of those, right? So it's amazing to have someone look at you from the outside and say, did you realize you're trend trading in a range-bound market? Is that right, Bud? It's weird. You know, like golf lessons is pretty cool, right? Because they're like, how you doing? Well, I'm pretty good at driving, but it's really my irons that are messing up my game. You know, I can do the short game. I feel okay with that. Putting's okay, but it seems like it's just my irons. Oh, so you feel pretty good with your driver? Yeah, I'm feeling pretty good. Okay, good. Grab your driver. Let's go. Let's hit a few shots. Let's record. Right? And then you're like, oh, well, oops, that was just a slice to the right. That's cool. I got this one. You know, every fourth shot's amazing, right? And then the coach comes up and he's like, oh, well, first of all, you're not aiming properly. Second of all, your feet are in the wrong position. Third, you're gripping it a little too tight. Move it this way. Last, this right shoulder's drop is this way, so this one's too low. So you got to stand this way. And now you're like, right? And you're like, no, this is totally screwed up, coach. This is no way. I'm pretty good at driving. This sucks. He's like, all right, let's go back to your way. Boom, slice. All right, oh, I'm just not warmed up. Okay, let's do the camera, right? And now they record you with the camera and they go back and they show you, all right, here's a professional golfer, here's you. You're like, oh. And then from this side, here's a professional golfer, here's you. You're leaning way too far on the left, which means you're hitting down on the ball, but then your hands are late, right? So you're creating this high or this low to the right scenario because you're leaning here and like, forget about your irons. You don't know how to golf, right? You're like, but So, and that actually kind of happened to me. So my golf coach, his claim to fame is he shot a 59 on a PGA tournament, and he was paired with Tiger Woods on Sunday, and it rained. The one day, like all the TV cameras are going to follow you, it rained, and it rained out. So he didn't actually get to do it, but he was paired with him. He's on the ticket somewhere. But that did happen to me where, I wasn't holding the club right. I wasn't aiming properly, but I was a hell of a driver, according to me. And then when you see what you should be doing, it's the third kind of party, like the observing yourself from outside yourself. And you're like, oh, wow. Wow. But it's important. Because if you don't know reality, you're gonna make a lot of assumptions that are just wrong. Okay? No, practice does not perfect, right? Practice is simply persistence, but it does not make perfection. And using golf as the example again, you can golf, let's say, twice a month for the next 10 years, and you probably won't be a significantly better golfer. You might get better in the first 6 months, or maybe the first year. Let's say the first year you'll become a reasonably better golfer, but in year 2 you won't. In year 3 you won't be significantly better. Year 4 you won't be significantly better. You'll just very quickly be very consistently mediocre. Practice makes persistence only. Well, that's different, good, right? Yeah, but just because your track goes, my football coach in high school said only women and horses sweat. I can't even say it. He would say only women and horses sweat, and I still have no idea what the hell that means. And I apologize if someone knows what that means, and I just said something horribly rude. I apologize. But this was 1989. In 1989, this is what an adult said to me. Only women and horses sweat. Great. I don't know what that means. So if your track coach said, oh, wow, if your track coach said it, he must be brilliant, right? So, like, I dedicate, 1/3 of my book to keeping a trade journal properly. And that's getting you closer to practicing perfectly versus practice making perfection. Practice doesn't make perfection. Okay? But you can have perfect practicing, and that will be helpful. Okay? Now, there's stuff inside that you don't realize is powerful. So you can read my book and you can go through that and you're like, oh, well, that's really enlightening. That's really good. And then not do it. And knowing isn't what makes you a better trader. Or kind of doing some of it doesn't make you a better trader. So for example, my version of journaling is so unbelievably time consuming that you have to go through this process. I don't know how you find success in your way. I know my way. You get to a point where it's so much work journaling that you make one of two choices. One, you stop journaling and you go ahead and fail, right? Or you say, well, it's so much effort and time to journal properly that I'm going to start making less trades. Because every time I pull the trigger and sell something or buy something, I know it's going to take 20 minutes, maybe a half an hour of time. And if I'm making 6 or 7 trades a day, and like, dang, this is a lot of work. So what happens is when you get into the market and you see a trade, but it's sort of like mediocre, like, yeah, it's kind of resistance, maybe I'll take a shot. Well, you stop doing this now because you're like, well, damn, if I take a shot, even if it's break even, it's going to take a half an hour of my time to document this trade properly. So you stop making the trade because there's consequence for you pulling the trigger. And the mediocrity goes away. And where do your losses live, guys? When you're an okay trader, when you're pretty good at technical analysis, where is the vast majority of your losses coming from? From the crazy, stupid trades? Well, no, you don't do that anymore. That's for amateurs. Oh, well, I loaded the boat and sold the farm, put it all here and sold the top of the market because it couldn't go any higher. Okay, that's stupid. That's just stupid. But you're not stupid anymore, right? So where's the vast majority of your losses? Oh, the mediocre trades. Your good trades probably almost always perform. So when the consequence of a mediocre trade is you look at it, you're like, yeah, I can totally take a shot here, but I don't really have the lower low or the lower high or this other thing. And there's a high propensity for this thing to break even. I should wait for the better setup, which is the lower low, lower high scenario. Because if I take this one, it just throws away a half an hour. So I'll come back in 3 hours and catch the lower high and I'll take the better setup. And you take that and like you end up trading less and being more profitable. And it's that, like if you actually do what I teach you, then all of a sudden you're like, oh my God, there it is. That's why I wrote the book, gee whiz. Right? Gee whiz, come on. What was it, 11 years ago I wrote that? And bear in mind, when they approached me and they're like, Wayne, have you ever thought of writing a book? I'm like, yeah. Oh, really? Could you send us a table of contents? Yeah, I could. I'll send it to you tonight. They're like, really? So I already knew what I wanted to say. You know what I mean? And don't worry, guys. I make like $5 if you buy the book. So I'm not pitching the book so I can get rich selling you books. Okay. I'm telling you that what's probably holding you back is lack of proper lack of proper trade setups or trade planning, and probably little things like discipline. You know those little things like discipline? And until you know, you don't really know. And that's why you're going through performance analysis, having a coach really break you down, you will find that what's holding you back is not your ability to use moving averages or something, right? How much is the book? I have no idea. I don't set the price. It's not my book. Legally, it's not my book, guys. I only wrote it, and it belongs to Wiley Publishing. Yeah, Cash, that's a pretty good one. But remember, I don't intend to, right? Cash says in your book, you say that you opt for a 50 pip stop loss. Is that still the case? Yes, but I do not intend to take a 50 pip loss. I think in the book I say something like, it's only there in case I have a heart attack, fall on the floor, and die, right? I'm protecting my family so that if there's a catastrophic failure, the most I can possibly lose on a trade is 50 pips. But I'm not going to sit on it stubborn, watching it make lower lows when I'm long and watch a 50 pips stop get hit. Oh, I never said that either. And bear in mind, Cash, when I wrote that book, most people had like 10 pip stop losses. Okay. So that was revolutionary at the time. People were like, what are you talking about? 50 pips? That's so hard, right? Somebody just tried to spam us about Jesus. Does Jesus really want, like, that's what he was intending for his disciples to log into people's YouTube channels and in a live chat spam them about the word of God? Really? Is that what Jesus wanted? So anyways, I blocked it. But still, it's just real. Like, people are so weird. Like, I was driving to Florida and we stopped at a museum, just a little side of the road museum. Nobody in the world stops in these little museums. So anyways, I love to do that with the kids. We stop and look at the history. And, I learned that, anyways. So I use the restroom while I'm there because we're on a long road trip. So I go into the restroom and it's a nice little museum, a nice little restroom and all that kind of stuff. Really hokey pokey, but I like these things. And then someone carved in like something about Jesus above the urinal so that I'd be forced to see it while I urinate. And I'm like, I think Jesus would be very upset by this, right? Like, this is what he wants? Really? I'm like, it's just strange to me. But anyways, whatever we talking about. Oh yeah, discipline and oh man, that got me off track. Well, there you go. Oh, having an outside view, developing patience, developing discipline, having trade plans in advance, being in control. All right, careful guys. Now we don't need spam the other way. All right, so anyways, yeah. Patience, discipline, guys. So for everyone going through the performance assessment, good luck. I hope it really is insightful. Oh, what is the name? Strategic and Tactical Forex Trading. But I'm pretty sure if you just go to Amazon.com and type in Wayne McDonald, you will find it that way as well. And has everyone that's read it left a review? Right on the Exiles. Yeah, gold. Yeah, gold. Well, as far as Rand, the question here is what if impacts Rand? And there used to be a very, very high correlation between gold and Rand. And I think that's not what's going on now. If that's what you're looking at, you're probably right where the correlation is broken down because there's other things going on in the world right now. But yeah, like gold would go up, and South Africa sold a lot of gold in the open market. So gold would go up and ZAR would go up, right? South African Rand. Okay. But now it's not necessarily true. So now, like, gold for a while was an inflation hedge, and then gold was a safe haven, and gold can sometimes be anti-dollar. So it depends on gold's relationship with the rest of the world and such. So I'd be careful with that. So one of the things we could do here, let's put it here. Where is it? There it is. That's not gold. Okay, we'll do this. I'm bringing in my love. Welcome to the new age. To the new age. Welcome to the new age. To the new age. Okay, and let's change this template. I'm radioactive. I'm radioactive. Oh, way down here. Okay, so let's move to 4 hours. Okay, do they look the same to you? And it should be opposite. It should be perfectly opposite. So do they look perfectly opposite? Lucky Lewis says, hey, buddy, if the UK Parliament doesn't go through with today, blah, 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 is it positive or negative for the pound? Why don't you be there and see? I would never guess. I mean, you could guess, but I wouldn't trade that way to say, well, I don't think they're going to do that. And if that's the case, then the other thing's going to do this. There's a lot of market participants. So I'd be careful. I'd be careful with the guessing and stuff. I'd rather you just be there at 2 p.m. and trade it. And like I've already done for you, identify major key levels of support and resistance, which would create pullbacks or reversals, and then be ready as a bull or a bear at particular levels. So, you know, that kind of stuff. And if the results take the market bearish, then you set up a series of bearish trade plans on multiple time frames. Right, crypto says, isn't fundamentals already priced in? Yes. That's why I wouldn't guess, because very often the opposite happens. And it's because some people take like common knowledge, but they fit common knowledge in the wrong scenario, and it doesn't work out, and they're wondering why. So like, for example, shouldn't USD ZAR be going as straight down just as much as gold went straight up? And while in normal market conditions, when the global economy is healthy, then yes, South Africa sells a lot of gold and they profit from it. It's really good for South Africa, and the ZAR goes up in value. But that's when the dollar also happens to be weak, which means Americans are buying from foreigners and foreigners are selling to Americans and everything is healthy, but we're not in that world at the moment. So that's the traditional correlation, but as I'm trying to show you, that's not what we have, and so that wouldn't be the right thing. Okay? So what happens today may or may not be good for the Great British Pound. I think most people are thinking it's not going to be very good. So if there was good news, it may be more good news-ish to the upside for British pound because maybe everyone's expecting bad news. So less bad news, let's say just not a no, right, could be so unbelievably good, the pound could rally very, very, very significantly because everyone's expecting bad news. I don't know if that's the case because I'm not British. So maybe everyone's expecting good news, or maybe exit is good news and not exiting is bad news. I don't know. So it comes down to what is priced in and to what degree are people wrong. Okay? So I would never just bet and say, for example, gold is going up, so I'm going to buy South African Rand. That is often true, but not always true. And then I look in these market conditions, and it's not true now. So South Africa Rand got really strong so far in this month, and gold hasn't done anything so far this month. They're not correlated. Yeah, the interest is fantastic, isn't it? Yeah. Okay. So just, right, think more, analyze more. I want you guys to really drive toward being an expert. I want you to become an expert in something, anything. And I've said this to the group for years and years and years, right? So for example, I would like you to create, pick something, anything you want. Gold, great. I want you to become a golden expert, an expert in gold. And then I want you to create a PowerPoint presentation, maybe only 3 slides. Okay. What controls gold prices globally? Right? So therefore, you know what to watch. What are you watching? Is it inflation? Is it the IMF? Is it Middle Eastern economies? I don't know. What do you watch for your bellwether of gold? And therefore, you should know, like, China and the United States are some of the largest producers of gold in the world, much more than South Africa and Australia. But South Africa and Australia are, or have been in the past, positively impacted by gold prices going up. In fact, there was a time when my USD, my Aussie USD chart was labeled gold. So I wouldn't even look at gold prices. I would trade Aussie USD as gold because the positive correlation was so strong. Well, that's no longer the case. But what is it that you watch to, fundamentally, let's say, to analyze the gold market? And then the second slide should be, are you a bull or a bear? Are you buying dips or are you selling rallies? That's 99% of what matters as a trader. If you don't know what you're going to do tomorrow, then forget it. How are you supposed to do well today? Okay. And then lastly, right? And then you put these slides together and become an expert and then start trading it as an expert. And you're watching the economic reports as an expert. So if you're reading OPEC reports, you're thinking about it as gold. If you're reading the IMF reports, you're thinking about it as gold. If you're reading gold export data, like how much gold is South Africa exporting? And is it good? Is it better than average, or is it less than average? Is it less moving toward normal, or is it above normal heading back to normal? Remember all these cycles? Where are we in the gold production cycle? What else is going on? Like, you should become an expert in gold, both fundamentally and technically, and trade it with a bias that you can argue with the data you've collected fundamentally. And when you get to that point and you do that for a couple of years, 2-3 years, I think you'll be really, really, really good at trading gold. So I've gone way past, guys. I've gone like almost 2 hours. 8, 7, 8. Yeah, I've gone almost 2 hours today. I apologize. So thank you for being a client of Trader's Way. If you are new to our family, a new subscriber perhaps, visit Trader's Way and open up an account today, even a demo. And then, of course, my chart templates are in the video below. So go to Trader's Way, open an account, demo's fine, then download MT4, get that installed, and then download my chart templates, put it into your MT4. So now your chart templates will look like mine, right? If you need training, if you want to, oh, I never said this before. If you want to go through the performance analysis I was talking about with a coach, right? fxbootcamp.com. What else? I guess that's it. Don't forget to give a thumbs up to the video, okay? And without further ado, thank you very much for your 2 hours of your life today, and I will see you tomorrow. Remember, subscribe, guys. Thank you. Thank you very much for being a part of our YouTube channel. Cheers.